Good morning, it's Monday the 20th of February and welcome to our regular Monday morning roundup of the coming week's economic highlights. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets. We'll then dive into some of the more significant highlights afterwards with our own thoughts and analysis. So as always, let's get straight to it. So the economic numbers being issued this week start today with an update on the Eurozone's consumer confidence, and of course today is US President's Day. On Tuesday, we hear the latest global services and manufacturing PMIs. That's something that we'll discuss in more detail in a moment. Also on Tuesday, we'll hear the latest German ZEW economic sentiment, CPIs in Canada, retail sales in Canada, and existing home sales over in the US. It's interest rate decision day for New Zealand on Wednesday, and we'll be giving our thoughts on this afterwards, as well as on the release of the minutes from the last meeting of the Fed. Wednesday also sees releases for CPIs in Germany and the IFO business numbers. Inflation data from the Eurozone is released on Thursday with the CPI update, and that's something again that we'll discuss later on in today's video. Thursday also sees GDP Q4 figures in the US, the jobless claims and the EIA crude oil inventories. And towards the end of today's report, we'll also be giving our thoughts on the release of core PCE over in the US, due out at the end of this week. And to wrap up the week, Germany releases its latest GDP figures, and we'll get an update on the Michigan consumer confidence numbers. And the companies that we'll hear trading updates from this week start today with BHP and Nordstrom. On Tuesday, we'll hear from Antofagasta and Coinbase, and bank reporting season continues with end-of-year results from HSBC, which we'll be discussing in more detail in a moment, as well as Walmart, who are also due to release their end-of-year results. And to wrap up Tuesday, results will be coming in from Home Depot. And the next bank in line, Lloyds, will be reporting end-of-year results on Wednesday, which we'll also give our thoughts on afterwards, as well as taking a look in more detail at chipmaker Nvidia, who are also reporting Q4s on Wednesday. And also coming in on Wednesday, results from Baidu, eBay and Rio Tinto. Thursday, we'll hear results from Alibaba, Anglo American, BAE Systems, Deutsche, Hayes, Serco, Warner Brothers Discovery, WPP, and to wrap up a busy Thursday, Royce are due to report their end-of-year results. And we'll take a look at those in more detail at the end of today's video. And finally on Friday, AIG. Well, after a run of stronger than forecast data last week, traders finally appeared to accept the Federal Reserve's view that interest rates were likely to rise higher for longer. Meanwhile, in the UK, mixed data meant that we're none the wiser as to the Bank of England's future path for interest rates. PMI data this week will provide clues as to how the US, the Eurozone and UK economies are holding up in February, and whether recession fears should keep receding. Meanwhile, UK banks and US retailers are set to dominate earnings. So let's take a look at this week's bigger stories in more detail. Eurozone PMIs are due for an update on Tuesday. Well, the Eurozone's business activity unexpectedly returned to growth in January, as the composite PMI rose back above 50 for the first time since June. The composite PMI is expected to remain above the key 50 level in February to 50.2, amid growth in the service sector and a slower contraction in manufacturing. So as a result, do keep an eye out this week on the Euro, the DAX and the EU Stocks 50. And with annual results due for release on Tuesday, HSBC is expected to see revenue boosted by higher interest rates. However, earnings are likely to be pulled lower by bad loan provisions. Expectations are for $3.1 billion set aside for potential bad loans amidst an uncertain economic outlook. And this is in sharp contrast to the release of reserves in 2021, which helped lift profits by $900 million. Attention will firmly be on the outlook for 2023, with markets expecting provisions to surge a further 35% to $4.3 billion. Meanwhile, the reopening of the economy in China could provide a tailwind. HSBC has impressed the market with reining in its costs this year and operating expenses are expected to be 3.5% lower at $33.4 billion, with expectations for costs to drop a further 5.8% in 2023. The share price trades up 13% across the past year and is up 17% since the start of 2023. Walmart, the world's largest retailer and a bellwether for the health of the broader US economy, is due to report fourth quarter results also here on Tuesday. Well, comparable sales are expected to rise 4.9% in the final 3 months of the year, which would mark the slowest growth across the key holiday shopping season in 3 years. It's worth noting that Walmart has significant exposure to food and drink, where consumer cash is being directed in this high inflationary environment. Recent US retail sales came in stronger than expected in food and furniture, or among the items that were particularly in demand. Rising costs are a headwind, particularly rising wages, given a 2.3 million workforce. And central banks' interest rate decisions continue to dominate the FX markets. And this week it's the Royal Bank of New Zealand's turn, with their latest decision due on Tuesday. Now, while the market is forecasting a 0.5% rate hike, taking the OCR to 4.75%, the central bank could hike by 0.75% as indicated in the November MPC OCR forecast. That said, a 25 basis point hike shouldn't be ruled out either, given that inflation was at 7.2%, below the bank's forecast of 7.5%, and after weaker than expected employment figures. The latest RBNZ meeting comes as the country deals with the impact of Cyclone Gabrielle. As the Eurozone reports its latest CPIs on Wednesday, inflation is expected to drop for a third straight month to 8.5% year-on-year in January. That's down from 9.2% in December, supporting the view that peak inflation has passed. Well, the data comes after the European Commission downwardly revised its inflation forecast for 2023 to 5.6%, from the 6.1% forecast in November. Cooler than forecast CPI could take pressure off the ECB to aggressively hike rates. That said, the ECB is still expected to raise rates by 50 basis points in March. And Wednesday also sees the next bank in line, Lloyds, to report its annual results. Well, the UK-focused bank was likely to follow in the footsteps of its peers, where a strong performance in 2022 was overshadowed by a weaker outlook for 2023. Higher interest rates boosted revenue in 2022, but bad loan provisions are expected to be in the region of £1.4 billion. As a result, pre-tax profit is expected to rise 1.8% to £7 billion after upgrading its net interest margin in the previous quarter. Guidance for 2023 will be under the spotlight, with the markets optimistic that the bank can reach 3.1%. Bad loan provisions for 2023 are expected in the region of £2 billion. However, Lloyds is proving to be effective with its cost control, and its cost-to-income ratio is below that of its rivals. The outlook for the housing market is also likely to hang over Lloyds, the largest lender in the UK. And finally on Wednesday, US chipmaker Nvidia is due to report its end-of-year results. Well, the share price has fallen around 70% from its all-time high in 2021, pressured by a slowdown in gaming and the broader personal computer market. More recently, the share price has started to rebound, and brokers have become bullish on the stock thanks to the artificial intelligence tailwind. Optimism is growing, and Nvidia's leadership in semiconductors for AI will boost sales in the coming years. Meanwhile, the near-term outlook could remain volatile, as the chipmaker is set to report a 21% fall in revenue to $6 billion and a 38% fall in earnings per share to 81 cents, with a further slowdown in the data center business expected. Rolls-Royce boss Tufan Ergin-Bilgic, who took over on January the 1st, will unveil his turnaround plan alongside the annual results due out on Thursday. He's expected to take a hard line, with more job cuts expected, and the plan is likely to attract as much attention, if not more, than the results themselves. Annual underlying revenue is expected to rise 7% in 2022, while the underlying operating profit is expected to rise 18% to £489.1 million. Free cash flow will be the key metric, and investors will be hoping for £96 million worth of cash, with an even more significant recovery expected in 2023. The share price has traded approximately flat over the past 12 months and is up 12% in 2023. And finally on Friday, we get the latest update on US inflation in the form of the core PCE. Well, inflation in the US is falling. Fed Reserve Chair Jerome Powell confirmed this last week, saying that the disinflation process has indeed started. Well, core PCE, which is the Fed's preferred inflation gauge, is expected to fall again in January to 4.1% year on year. That's down from 4.4% in December. Well, the data comes after US CPI inflation cooled by less than expected, raising concerns that the Fed may have to raise rates for longer. Should core PCE also cool by less than expected, well, the market could become more jittery about the Fed's path for interest rates. So those were the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from Endeavour Mining, GSK, Land Securities, AstraZeneca, Unilever, Barclays, Standard Chartered. And in the FTSE 250, we'll hear from Whitton Investment Trust, Redrow, BlackRock Throgmorton Trust, Plus 500 and BBGI Global Infrastructure. So there you have it. We're still at that nexus point with global policymakers swinging in the wind a little at the moment, all claiming confidence in their belief in which way inflation is heading, but that lack of consensus actually telling more of a story than the policymakers themselves. Still, as the policymakers stand looking at each other a little sheepishly whilst inflation makes up its mind which way it's heading, no such sheepishness here at Atlantic Capital Markets, where, as always, we ensure that our investors keep receiving solid and confident advice to safeguard their portfolios. So in the meantime, even if you're not one of our investing clients, don't forget that you can always try our app, delivering you our award-winning trading signals, which of course are free to receive and to use. Aside from that, thanks as always for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates, with of course our expert market analysis and opinions. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.